All right, we are live. Okay, well, to keep ourselves on schedule today, welcome to day one of the first ever Founders Week YQG. This is our fourth session. We had an awesome start so far. So for those of you that are new to this session, or this is your first session, welcome. And I see Sue is back for round two. So welcome, Sue. And again, Founders Week YQG, soon to be the biggest entrepreneurial event for WindsorEssex. This is a week all about engaging the entrepreneurial startup and founder community. We're here to connect, engage, and celebrate all that is the WindsorEssex startup community. And weeks like this, they take a lot of power behind them. That includes staff, teams, partners, and sponsors. And with that, we'd like to acknowledge St. Clair College Alumni Association, the Job Shop, Workforce WindsorEssex, Baker Tilly Windsor LLP, Alpha Core Group, WentureIt, and our four founding partners, EPICentre, Genesis Entrepreneurship and Innovation Center, and WEtech Alliance, as well as the WindsorEssex Small Business and Entrepreneurship Center, and of course, the province of Ontario, who is one of our big funders here at WEtech. If you want any information about Founders Week, registration will be open all week long. So for those joining us, feel free to continue telling friends and family. Registration, again, open all week long, and it's completely free. Few housekeeping items. As you see, we're leveraging the Zoom webinar platform. So we have enabled the chat feature. So we will be moderating the chat. And again, feel free to engage with other attendees as well as our panelists today. And you have a Q&A feature there. So feel free at any point in time to put your questions in there. You can upvote those questions, and you can also supply those questions anonymously. So we hope we will take some questions at the end of today's session, because I think, but we've got some really good questions for Mike. So with that, I have the pleasure of introducing Mike Labiak, who I've known for what appears like the last decade. In fact, Mike, as we're here talking about pitching to investors, I'm not sure if you were there when I pitched to the Great Lakes Angels when I first started my company. Were you there?
Yes, I was.
Okay, so I've been through the ringer. And we're gonna talk today about raising capital, what to know, what's that secret sauce. But first, let me read Mike Labiak's wonderful bio. So Mike Labiak is a successful entrepreneur, active investor, and general partner in ventures that have become listed on the TSX Venture Exchange. Mike's investment portfolio and business interests encompass a wide range of endeavors from healthcare to automotive, energy production, and real estate transaction. Mike was a past general manager of Windsor Honda Automotive Lending Group that led to hyper-growth sales during his tenure. He is also instrumental in the formation and acted as a founding member, COO of Essex Angel Capital, which Mike, you and I worked together with. Yes. He is also a founding shareholder for VR Capital Group in 2015, which completed its qualifying transaction with Vertex Research Group. In 2017, his director role through Soleil Capital Group successfully completed another qualifying transaction, and we'll get to what that actually means shortly, with Gold Play Exploration. Also, as a director of NBS Capital, he completed a qualifying transaction with Nevada Silver Corporation. Currently, also as a director for TUP Capital, he signed a letter of intent November 5th, 2021 with Beyond Chips to complete a qualifying transaction. Mike, along with his wife, have over 25 years experience in the ownership, development, and execution of several apothecary pharmacies, including mergers and acquisitions activity. Mike specializes in financial metric assessment, investor relations, investor planning, corporate sales, and new customer development. Mike holds a Bachelor of Arts, Business Emphasis Finance from Michigan State University. Mike, it's so awesome. And thank you so much for joining us and everything that you do for the startup community. I know you're a member of our venture success team here at WEtech, so welcome.
Yes, thank you very much. That was a nice introduction. I'd also like to thank the sponsors and all the guests who are here today.
Yes, wonderful. We've got a good group of people joining us right now. So we're going to start things off with a bit of a rapid fire. So I'm going to throw these at you and you're going to throw them right back at me. So okay. 3 fun facts about you.
Okay, easy question at the beginning. How about I go husband, father, grandfather?
Okay, you have beautiful grandchildren. What business did you wish you had founded?
Well, I think the obvious answer would be Apple, Google, Amazon, Facebook, Tesla, but I'm not going to go there. I'm going to give you 2. Believe it or not, I'd say one of the Canadian banks, TD Bank.
Okay.
And the only reason I picked one of the banks is that over time, they've endured over 100 years. I don't think Apple, Facebook, Google, the FANG stocks are going to be what they are 20 years from now. When I was a student, IBM was it. It was the company. I'm not sure people under 25 years old even know what IBM is any longer. And the other thing is,
Definitely know what they are.
yes.
So our past, our first few sessions, we've heard a lot of Amazon. I wish I would have founded Amazon. So it's nice to hear you bring something else into the loop here. Best advice you've ever got?
Best advice I've ever gotten. I'll give you a couple. My dad always used to tell me, and always does tell me, measure twice, cut once, which is just a proverb for think about it before you do it. One of my favorite quotes, and I don't even know if it's an actual quote, it might be just internet garbage. Albert Einstein called it the most powerful force in the universe, that'd be compound interest. But the one that makes the most sense to me is I worked with a gentleman by the name of Louis Gardner in the late 80s, real sharp individual. And he used to always say to me, inside of a business, every dollar you spend has to be focused on profits or ROI.
Oh, agreed. And we're going to get into that. And last question, successful entrepreneur, who do you think of?
There's a gentleman by the name of Tom Sosnoff who worked in the options pits in the 80s and 90s in Chicago, who had a very successful channel called Tasty Trade. And the interesting story about that particular world was they used to trade in 1/8 of a dollar. So you'd buy and sell in a 12.5-cent spread. That changed to a penny almost overnight within a short time period. These gentlemen developed trading strategies to deal with a 12-fold decrease in profits. It's an interesting story. It's a great read.
So definitely we'll put that as a resource there in the chat. Okay, so we're going to jump right into it. We've got about 30 plus minutes to tackle a pretty big issue, one that we hear often in our role at WEtech Alliance with a lot of our clients and entrepreneurs in the region. But first, Mike, if you just want to kind of set the stage to talk a little bit about yourself and your background, that would be great. And I know we shared a bit of your bio already, but feel free just to kind of set the stage for us.
Yeah, I'll be kind of quick. Born and raised in Windsor, went to Assumption High School, went to Michigan State University after grade 12, majored in finance and baseball, got an opportunity to play for Team Canada, which was a personal thrill. Married my prom date years later, had 3 wonderful kids. Around the age of 27, 29, she's a graduated pharmacist. We purchased our first pharmacy, and at the same time became general manager at Windsor Honda. Over the next 20 years, as far as occupation is concerned, we evolved in and out of pharmacies, and I stayed at Windsor Honda. And then in 2003, really started getting into kind of the investment world. 2003-ish.
And what's really interesting, Mike, because I know a bit of the family, and you have a daughter who is running a very successful business right now called Silk Labs, doing amazing things, all leveraging the power of e-commerce.
Yeah, she's done a great job. She's got a.
So shout out to Jenna at Silk Labs.
Yes.
So Mike, you mentioned 2003 or 2003 was when you started kind of in the investment space?
Yeah, I thought about this before the call. From 2003 to about 2014, I had a follow strategy in investing. And what I did a couple of things. I came from a background of policy, procedure, and execution. And that's how the retail car businesses ran. That's how pharmacies are ran, and those stringent rules. And then I took that idea and kind of moved it off into my investing strategy. But I was following. I'd go in deals behind people, follow them in through friends. I had some great success in 2003 to 2014, but I also had a couple wicked failures. And because of the failures, I was not leading my investment. I was trying to fit my investment ideas into structure. And then I started thinking about it, and I got into the idea that I should be looking for certain structures, not following. And so I went to a bit of a leadership role that changed my outcomes. I didn't have any greater successes, but I eliminated the downsides.
I love that you said the F word, because part of this Founders Week YQG, we're going to be celebrating failures on Friday, right? We don't do enough to talk about, we talk a lot about our successes, but we don't always talk about our failures and what can be learned by that. And just in the chat, I wanted to give a shout out to Katie Stokes, who is one of the co-owners of Whiskey Jack Boutique, who who sells your daughter's products. So if you're looking
Oh,
to
yes,
check
yes.
out Silk Labs, they're available at Whiskey Jack Boutique, which is a great local retail business downtown Windsor with so many awesome Canadian-made products. So if you're looking for some great Christmas gifts, feel free to check them out.
Yeah, cool place.
All right, so let's get right into startup funding, because again, we're already starting to get some questions from some of our audience members. But Mike, maybe just give a bit of an overview of how startup funding works, right? We talk about, you hear bootstrapping, you hear an angel investor, venture capital, friends and family. So maybe just give the audience a bit of an understanding of that startup funding kind of roadmap.
So I think what you really have to do as a startup company or somebody looking for funding is qualify yourself. What are you really? If you're a no revenue company and you're a startup, for all intents and purposes, your capital means sources are going to be either your own savings, friends and family. It's going to be pretty hard to find outside capital investment. If you're revenue growing, you're operating, and you're showing business characteristics, you're then eligible for angels, VCs, possibly institutions, depending on your size. So you've grown to the next level. If you sustain that for 2 or 3 years and show proper track records, you're now eligible for the public markets. So I think it all starts with categorizing yourself and what you are.
You're right. So we got like bootstrapping, angel, VC,
Yeah.
and then obviously you have your series A, B, C, D, they go on.
Yeah.
For those again listening, we also have another session with BDC on Friday that will really talk about that journey more in detail, where today we're really looking at the investment side and from the investor lens. So Mike, you've seen, I probably can't imagine how many pitches you've actually been a part of. How do you as an investor evaluate pitches, and maybe shed light on some of the best pitches, like the elements of it, and the worst pitches you've seen?
So when we evaluate a pitch or a prospective company, there's 3 qualifiers they have to have. And I'm talking about from the emphasis of going to public markets. The qualifiers are, you must have commercial revenue. So what is commercial revenue? If you've got a widget company, you're selling widgets to your uncle's factory, and that's your only customer, that's not commercial revenue. That's not arm's length, right? You need arm's length sales, you need multiple customers. So you need commercial revenue. That revenue has to be, second phase, has to be both scalable and repeatable. So you have to show you can grow your customer base, and you must show that you can sell items to the customer several times. I don't have the footnote with me, but Harvard did a fairly extensive study, and repeatability really speaks to cost of acquisition of customer. If you don't have repeatability, it's pretty hard to survive. And the third one, of course, is the moat, the barrier to entry. How do you keep your competitors away? So that's kind of the basis for evaluating a pitch, but that's kind of a qualifier. At that point in time, we take a look at different ideas. So to answer your question about best pitches, I heard a great pitch probably the last 2 months that addressed the landlord-renter relationship. It was an elegant solution, because currently what's going on is that you pay your rent by check or e-transfer or whatever. It's a haphazard way of methodology. And it was an app designed to organize it and make it simpler for all parties. Very elegant solution. My worst pitch happened about a year ago. It was some young guys from a Southwestern Ontario University who had a product that was non-mainstream. They hadn't sold a single item, nor had they actually produced one that they could sell. And they were fairly arrogant, really poor presentation. And the best part of the whole pitch was the founder came out and told all the investors who are sitting there that unless there's a concrete way of us proving we could help him, he's not interested in talking to us. So not transparent, doesn't know what his company was, didn't know where he stood, didn't stay in his lane. Highly suggest everybody avoid those ideas.
So Mike, I think it's great that you talked about, that competitive analysis in terms of, owning, it could be intellectual property for that matter, right? Is what's going to keep your competitors away. That's something that, we're very much engaged with now is, it's so important to protect not only your product or service and how it's been created, but also your intellectual property when it comes to your brand, for example, right? Those are really important pieces. So
key suppliers work, key customers work. There's a lot of different methodologies in the moat.
And Mike, I remember, hearing about, there's 2 things investors look for, right? The product and service and its value, solving a pain point. How important is the team, right? Because I think we see sometimes, right, great product, not necessarily a great team. So how does investors evaluate the team, and how important is it, for the team to be able to execute on that?
most investors, including myself, evaluate the team by evaluating their plan to market. Plan to market means producing the good, running the business, selling the good. And we usually break that down into like 5 areas: price, product, place, and promotion of people. And I'll go quick with this. Price is kind of the idea of they're selling a good or a service in the marketplace. What's the competitor charging? What are they charging? It also speaks to margin. Is there enough margin to run the business? Is it proper margin? Product, again, what are you doing? What is your goals? What are you trying to achieve? Place is really important. I see a lot of Canadian firms pitch me, and pitch people I know, and they talk about the Canadian marketplace. We have a great advantage in this country. We share the land border with probably the largest retail economy in the world, 1 or 2, depending on what you think China is. And it's right on our doorstep. If you're not going to harness the power of the United States economy, you're probably missing out more than you can imagine. There's only 39 million people in Canada, and there's almost 400 million in the US.
We always talk about that, of knowing, Canada is a great country, but it's not always a big country, right? When you're looking at, selling your product or services, to have a global mindset. Mike, what is the best way? In fact, we've got a comment now is, someone looking for investment.
Yeah.
How does someone approach someone like yourself, whether you're an angel or VC? So I think there's also like, what's the, is it through email? Is it through LinkedIn? What do they send you? How do you as an investor want to be approached? So for those that are listening, that are looking to connect with investors, give us kind of like the do's and don'ts.
Well, first thing to say is, on a macro basis, you want to be transparent, right? But before you contact anybody, you have to be prepared. You should have a 10 to 15 page slide deck that's easy to understand. You should have a technical deck if you need it, in case you have to explain it deeper. And more importantly, you should have your elevator pitch down pat. And the elevator pitch is really simple to this. And I can't believe how many times I don't hear this. It's really simple. What do I do? What does my company do? And how to make money doing it? If you can't put that together in a 2-minute, quick, elegant little conversation, then you got to rethink yourself or rethink your business. And the best way to contact a VC, be transparent, email them, try to get some human on the phone, try to make an appointment for a pitch. And when you make that phone call, you better be ready to go, because you never know what's going to happen in that phone call.
So many startups feel like they need money, right? And yet they still haven't necessarily proven the model yet. What advice would you give to them?
You absolutely have to earn investment. No one's going to give it to you. So the 3 steps, of course, right, are family and friends, angel, private money, and then the public markets. And just to back up a little bit, when you talk about investment in a company, there's a pecking order that you should follow. You should try to reinvest your profits, and hopefully that's enough to make it. Good companies, or unicorns or spectacular companies, do that. Debt second, and equity is third. You can make a lot of entrepreneurs are afraid of debt, and maybe they don't qualify for debt or they can't get it. But debt is a leverage tool. You can make a hell of a lot of money by using debt.
Mm-hmm. A lot of, we've seen this, not just with local companies, but, all across Canada, where entrepreneurs are hesitant to bring on investors because they want to keep the equity in-house. But knowing that funding could also propel their growth, right? And the chances are you're not the only one in the race. So what advice do you have someone who says, I don't need investor money? I'm sure there's the truth to that, but for those who may not see, how important is, a strategic alignment, right? Where angel investors or VCs can sometimes come into the business and act as kind of experts. So what would you say to a company like that?
I would say, wake up. You're passing profits. Here's a little rule of thumb. If you're a private company in the past, not particularly today, but in the past, your company's worth 3 to 5 times earnings. On the public market, your companies are worth 10 times earnings. Now, those numbers are all skewed because we're in a bit of a crazy time in the marketplace. But by not taking capital and hampering growth, someone's going to take your growth from you. Mm-hmm. You're not in a vacuum. And it kind of speaks, when I hear that, it kind of speaks to possibly a principal of a company who really isn't up on his or her game.
But are there examples of companies who've done it on their own? Do you know
Yeah,
of
of
any?
course. Microsoft, big names like that came out of garages. It can happen and it will happen, but the chances are that you're going to be passing profits. You don't take capital to grow. No, if you're just taking capital for capital's sake, I'd say stop right there because that's not accretive.
What's interesting, and I was just trying to pull this up here on my screen, but we've seen actually record VC capital go into the Canadian ecosystem,
Yeah.
at least in the first quarter this year. So some things are changing, and but we still have a long ways to go. As you know, there is still a disparity in terms of ventures led by women in investments.
100%.
And again, obviously, we can talk a lot about kind of the disparities, whether it's women or different other different types of entrepreneurs. But I want to get into what types of startups do you invest in, Mike? And what kind of ventures do you think investors are looking for right now? You talked a little bit about those key elements. Are there sectors that you're excited about? What are your thoughts on that?
I've been all over the map with sectors in my life. We try to model everything. It gets back to the price, the product, the place, the presentation, the people. We've got to get past that thing, that particular hurdle. But one thing we look for today is asset-light companies. Nobody wants to see a company today with a manufacturing arm and a sales force. But they want to see a company that is subletting the manufacturing out and getting it done off-site. So there's no real assets being tied up, and possibly harnessing social media or using a sales force idea for sales. Those companies are a lot more accretive. They return better ROIs, and I wouldn't even say it's a new item. I think it's mainstream today. We also like to see companies that handle business metrics properly. For example, when I get pitched, I want to see comps. I want to see who your competitors are and what they're doing from an evaluation standpoint, from a pricing standpoint. They are the marketplace that you're dealing to, or you're commenting to. ROI is very important. Capital requirements are very important. And the thing that doesn't get talked about enough and should get talked about enough initially is exit strategy. And exit strategy doesn't necessarily mean you're going to sell the company. It means maybe you're going to roll up other companies.
I'm getting flashbacks from my pitch journey when I was, I hate to say it, 13 years ago.
A little while.
Yeah, so for those ROI, I'm sure it's a term most people know, but return on investment. Mike, what is an investor looking for in terms of ROI? I remember you talking about a 10x return. Is that still the market ROI expectancy?
Yeah, well, I think it's kind of all over the map. I mean, we're seeing in this world of meme stocks and things along those lines, we're seeing ROIs in the hundreds. I don't really think that's practical. I think it's kind of unicorn stuff. But yeah, 10Xs are probably where the world, everybody I know in the public market game talks about 10Xs, 5Xs. But the sky's the limit if you can keep the growth curve. Right now, the markets are evaluating top line growth only. That seems to be the metric. It is the metric. And if you can keep that moving at an appropriate rate, you get rewarded.
So before we jump into some of the challenges you see the companies you invested in experiencing, you talked about, that pitch deck, the elevator pitch. I know we were going to be sharing at the end of Founders Week a toolkit. And in this toolkit will be a lot of the things we talk about throughout the week. But Mike, do you have any resources or books you would suggest that founders look at to help model, that pitch deck or the elevator pitch?
There's lots of stuff on the internet. It's pretty easy to access. But as a form, I would say, again, a 10 to 15 page slide deck. It's got to be easy to understand. You got to get your point across, and you've got to lay it all out in a very logical way. But if you want to travel around the net, you can see all kinds of pitch decks. They're all over the place. The complex ones, I don't think work.
Yeah, well, perhaps, if you come across anything, feel free to send it to us this week and we can make sure that's uploaded into the toolkit. And I know at WEtech, we obviously work with companies as they're practicing their pitch. So I'm sure we can share some great resources for you as well.
There's one called Wealth Simply or Simply Wealth.
WealthSimple, I'm an investor in WealthSimple. Yes. Well, not really. I should say I'm leveraging the WealthSimple platform. I've lost $24.
Wow. It's a great hell of a pitch.
Big risks.
Big pitch deck. Good one.
Yeah, but a Canadian company, right? Interesting. We've had some Canadian companies have done, like I said, really well, and we've seen some more unicorns being born over the last year and then some here in Canada. So Mike, you've invested in lots of companies. You've obviously been with these companies and you've seen their journey. What are some of the challenges, big challenges you find the founders of the companies you are investing in facing? Are they growth challenges, further funding challenges, customer behavior changes because of COVID? What are you hearing and seeing?
Well, as a general term, I've never seen initial presentation deck or plan go as executed. There's always a twist or a turn. So what we kind of like to look for is, how did that principal, how that CEO handle the twist and turn? A lot of CEOs and principals, their first reaction is to blow the company up and rethink it. It's a bad mistake, in my opinion. We want to see how they handle, how the small pivots are made inside the company. And again, I've never seen one. I was in a deal in 2003 that changed spots to zebra stripes over time, though, because the operator was a competent individual and he kept making changes. It taught me a lot watching it. Again, in those years, I was following a follow strategy, so it was really informative for me. But handling the changes is an important aspect. And you see the people who can't handle the changes, they don't go very far.
So you've got to have some nimbleness in you as a founder. And I think we've,
got to be
for any founder over COVID, I think some of us have experienced that, whether it was supercharged growth in some cases and in others, completely new business models, right? So I would imagine the people joining us today are actively looking for money. So
yes.
If these, if this was your daughter, for example, and they were asking you for real tangible pieces of advice when raising money, what would you tell these founders?
Two things to start with. Qualify yourself. What is your company? Where do you sit in the cycle? More importantly, though, qualify the investor. What does the investor really want to see? Does he want to see growth and a capital appreciation? Does he want to see income? Does he want to see a combination of the both? Is he doing it for social aspects? There's a big movement on social investing. Mm-hmm. You really need to know what your investor is looking for and what you are yourself.
We've got a question, and I don't want to, and I'm happy just to kind of make this free. This is a very casual chat. A question coming in from one of the audience members. You talked about, Mike, an exit strategy, and I know that's something, I know when I was a founder, it was always, what is your exit strategy? And in most cases, companies choose to be acquired, right? I would like to sell my business to, and in some cases, like Shopify, right? I imagine they got a bunch of acquisition offers, but decided to plow through and grow. So can you just talk a little bit about the exit strategy piece? Because we've got a question on that.
Okay, so that's the obvious one, sell the company. Less obvious and maybe more practical. Maybe you want to be an acquirer. Maybe your company wants to acquire competitors and roll them up. Maybe you want to be involved in a roll up where you're taken out, but yet you still participate. You get rolled up as the junior, not the senior. But there's other exit strategies, and one that never gets talked about anymore is distributing of cash flow. If you've got a company that's creating lots of cash flow and you have shareholders, maybe you just keep running that company and distribute the cash flow out on a timely basis. That's your return. Mm-hmm. Well, you gotta have an idea what you want to do. And I do think it's kind of a weak statement to say in your exit strategy, well, we're going to do this, then we're going to get bought up by others, because you have no control over that. But you have control over cash flow. You have control over maybe you being the person buying people out. You have control about even saying, I wouldn't mind being acquired for the right strategic reasons. Vertical integration, by the way, is a great idea. Mm-hmm. Someone wants to buy the manufacturing plant, wants to buy the main business itself, wants to buy the sales arm, and wants to take it all and roll it into one company. That has some merit to it at the right size.
I laugh because today I got an email from Mir Canada, who was acquired by Lululemon. And you're probably wondering, why would Lululemon want to buy, now fitness tech, but you can start to see them building that vertical integration piece. Yeah. So yeah, just as a case in point. So Jim, I hope that answered your question. If you have a subsidiary question, we'll make sure we ask Mike. But Mike, we hear I can't tell you if I had $1 for every time we got asked this question or told this question. There's no capital here. That's something we hear often. If we go back to the startup community guru, Brad Felt, capital isn't always just cash. capital could be people, for example. So what would you say to someone saying, that's living here in Windsor-Essex, there's no capital here? Because there are some truths to the kind of earliness of our funding arm, right? We've got the WindsorEssex Capital Angel Network that's making some strides forward. We're discussing now at the Windsor Works City of Windsor level of a community venture capital fund. What would you say to someone that says there's no money here?
I would think you're wrong, first of all.
I was hoping you'd say that.
Well, here's where my head's at. First of all, when I hear that, I think of a person who doesn't categorize himself properly.
Okay.
So back to where are you at? Are you a startup? Are you mid-growth? Are you hyper-growth or moving hyper-growth? Where are you at? I would say that if you don't categorize yourself properly, you're going to frustrate yourself. If you expect someone to write you a check because you got an idea to build staplers out of plastic, some whatever you're going to do, and you haven't built a product yet, and you haven't sold anything yet, you don't have a business formed yet, no one's going to, practically speaking, no one's going to give you money but friends or family. So you gotta know where you're at. If you are doing the other things properly and you're not getting funding, I'm going to say your presentation's broke or your business is broke. Something's wrong. But if there's a company out there doing a couple million in sales, growing at 20-30% a year, there's funding available for you. You've got to figure out how to get it, and it starts with a proper presentation and hopefully no flaws in your business model, like superior flaws.
Some great questions coming in. I'm gonna jump to them because I think this is about you, founders. So first question, what's the process for a company to get to their IPO, and what can I do to prepare my team and organization to be on the public markets?
Well, I wouldn't suggest an IPO for a smaller company. Canada's got this process called CPC, Capital Pool Corporation, which is the process I almost exclusively take. It's a lot like a US SPAC, except it doesn't have the large dollar figures attached to it. It's reverse takeover, and it's basically a public shell. The business takes over the public shell and usually raises funds at the same time. And through this process, in a very short time period, turn around and end up being on a public markets listed. So it's a bit of a conceptual idea. It's a little hard to do in a soundbite, but that's the methodology we usually take. IPO actually is a initial public offering. There's a risk involved. You got to spend some money to get it done, significant funds. There's no guarantee that you will meet the hurdles, nor will you raise the right amount of money to fulfill your goals. The CPC kind of circumvents a lot of those ideas.
Awesome. And you hear a lot, a lot of the podcasts I'm listening to, you're hearing a lot more of that SPAC terminology.
Yes.
Especially like you said, Mike, coming out of the US. Another question coming in from another founder. Is it too difficult to become a public company when the revenue is below 5 million?
No. Nevada Silver had zero revenue. It was a prospective gold mine. So was Gold Play. Very specific though. It's junior mining, right? If revenue is under $5 million and you're running a proper business and you have a growth curve, it's not difficult at all. If you don't have a growth curve or you don't have an idea of how you're going to go north and 5 million's kind of your ceiling, it could get a little difficult. It would be very difficult. But if you're in a growth curve, it's very doable.
Okay, just a reminder, feel free to post it. We've got the Q&A, and I think there's some questions coming in from our chat. Mike, I think you're going to be approached maybe by some founders today who are looking for investment. I want to be mindful that, I'm sure you get pitched often. What is the best way for people to reach out to you when they get those elements prepared, the slide deck, and the validation of yourself? So what would be the best way for people to connect with you?
I'll supply my email. We'll connect off the email and we'll go from there. I'm very approachable. I'd love to take meetings with people, see what they're doing. And
you are. I can attest to the approachability. Mike doesn't like to say no to a lot. Maybe to pitches, but at least from supporting the startup community. Mike, you've been, you've probably sat through a number of pitches with a lot of our clients and community over the years. And I keep going back to when we did the Dragon's Den
yes.
practice your pitch session for some of the local entrepreneurs who are going to go forward on the CBC Dragon's Den show. Another question for you. This whole week is about building momentum and opportunity for the WindsorEssex startup ecosystem. We are still growing. I'd be the first to say, we have a lot of work to do. What do you think this community can do to better build our startup community? What do you think's missing, or what
Well,
opportunities are there?
we're in the early days. The culture isn't fully in place. Risk capital is limited. Ideas and businesses that fit that risk capital are limited. That's kind of the negative side. The positive side is we're really one win away, one company doing well, one good win away from being put on the radar screen. We sit right on the border of the US. There's a tremendous opportunity. We have a lower currency. There's some main ingredients to success sitting there. I think the way forward is going to be paved by our educational institutions, St. Clair College and University of Windsor. I think they need to provide support and physical space for startups. If you fire up the old Google machine and take a look at how Silicon Valley was formed, you'll find that Stanford University was a key element.
Yeah, I think that too. And I think there was a win, right? PayPal, really blew up, which then really started all these risk capital venture funds, right? So,
Yeah.
here we talk about how important to have that first win, because that breeds, again, it helps with culture, it helps with further investing in other entrepreneurs. We talk about, Mike, I couldn't agree with you more on space. Innovation is place-based. So we need a place where everyone can collide and connect, which is why a tech hub, innovation hub is part of our strategic priorities here at WEtech. So I agree with you. And the risk capital side is obviously something that we know we need to work on here. There is money elsewhere, but we want to grow the companies here, right? We've got this beautiful element of the ability to have a giant US market. Literally now we can actually cross the border today, 15 minutes away. So feel free. Oh, we've got another question here. If I'm a startup just launching, what do I need to consider now in order to be investable as I grow? So what are those elements they should start thinking about really early days?
Well, start with the elevator pitch and work backwards. What do you do? How do you make money doing it? You develop your product. You got to develop your sales network. And, if you're doing a service, you're not selling a good, you're still selling a service. So you have to develop those things in the early days. As far as form and, what you need to do to go public, there's going to be accounting requirements, but that can be done in retro. As long as you got proper accounting now, you're working with an accountant, you got notice to reader statements. That's the beginning of an audit eventually. So that's kind of a key piece eventually down the road.
Yeah, Mike, you bring up a good point, right? And I think to this attendees question, people tend to forget how important it is to have that, the books well done in the beginning, right?
Yeah.
Or, I can say this, we're not a startup, but we're in growth mode right now. HR, having those HR practices prepared as you start. Are there any other elements to that? You talk about, the sales funnel. I think I just want to expand on this question a little bit more.
Well, you got to farm out the activities, right? If you're a CEO and you're trying to raise capital, trying to do HR requirements, trying to do your own accounting, you're going to stop doing your business. And I see it all the time when people start looking for capital, they essentially stop operating the business. So what you really need to do from an accounting standpoint is, hire it out. HR, there's a lot of stuff available on the net, HR programs, but you want to be asset light. I can't emphasize that enough. Asset light companies are winning right now. They're the norm, not the exception. And you want to try to, as much as possible, keep your capital requirements down low.
You talk about the asset light companies are winning. Who do you see right now winning, and maybe a company that maybe everyone can relate to?
Well, on a big macro scale, a name we know is Salesforce. They're not being asset light. They're part of the solution to asset light. There's a business in that, right? There's a huge business in that. So basically, they're an internet workforce. And we got a great opportunity right now as the public, because we have this social media animal that can be harnessed. It doesn't take a lot of traction to have great success in social media.
Mm-hmm. No, I couldn't agree more. Okay, well, we are just almost on schedule here. We're at 2:40. Mike, did I miss any questions? Right, because I know we prepared today. We got some great questions from attendees. What questions are we missing, right? What other, advice can you share to this community who are looking, again, whether they're just starting out, thinking about one day raising money, to being in the position right now, seeking money?
Well, as a general comment, I would say that the first thing every principal or CEO has to do is kind of qualify yourself. What is your company? What are you doing? How do I get sales growth that is appropriate. I mean, I look at Carvana, a big company selling used cars in the US. There's no way they'll ever make a profit. They don't intend to make a profit. They're playing the growth curve idea. I don't think as a small company startup you can do that. I think you have to have all the solutions, be cash flow positive, have profits. And the other comment I have to say is that a lot of people don't understand the investor they're pitching to. You better really get a grasp on what this investor is looking for. When you talk about angel people in particular, I think they're looking for growth and income, right? The people I've talked to. So you better be able to satisfy that need. And of course, valuations and metrics and the comps, you got to be in the ballpark.
Yeah, valuation could be a whole nother fireside chat on how companies are evaluating themselves, which I know, again, you'd be a great resource for that. So we got another question coming in. It is, if I am a service-based business, how can I develop out of a moat deep and wide enough to still be an attractive investment to investors?
Well, whatever function you're providing, you've got to differentiate it from your crowd. So it's hard to speak to without getting into specifics, but you've got to either have contracts with certain people you provide your services to, or you're market dominant, or you could be using a follow strategy and following bigger companies in at less price. Depends what you're doing, but you got to carve something out.
Perfect. Thank you. I'm going to do a last call. We've got 3 minutes left. A last call for questions. If not, I'll do a quick wrap up. Oh. Excellent. We're getting some rave reviews in the chat, Mike.
Wow. Okay.
Excellent. Well, I can imagine this is a conversation that's not going to stop here. And it's one that, again, in the 10 years that I've spent in the startup ecosystem, it's something that's constantly evolving and changing. But Mike, thank you so much for your time. And again, someone, as I said, who's always been a give first mentality. You always come at supporting these types of events and startups with an intention of helping. And if you can make money along the way, that's also great. But I know your intentions are very pure. And so for everyone joining us, I'm going to ask our tech producer to put a survey link in the chat. And what that will do, after every Founders Week session, we're asking people to fill in a quick survey to tell us how we did. Again, this is so important for us to hear about, because this really helps us better plan for future Founders Week YQG and future entrepreneurial programming in this.
Just before I go, one of my personal goals has been to take a Windsor company public and have a win with it.
I'm
so
with
anybody
you.
out there who's got an idea?
Who wants to be the next unicorn?
Yeah, then picture. You don't have to do a unicorn. Just have a very successful company.
Oh, excellent. I couldn't agree more. I couldn't agree more with Mike. So you heard it. Mike is looking to invest in that high growth company. So let's get him. Let's get you that company. So the links in the chat again. Complete the survey. Would be awesome. And you'll also if you do complete the survey, you'll be in the chance to win a $50 Welcome to Windsor gift card powered by Tourism WindsorEssex Keeley Island. We have a full day still left to go. Following today's session, we have a leveraging your online presence to grow your business session. We've got an open networking session happening on Remo. And at 7 p.m. tonight, if you're looking for just something fun to do, we have a trivia night powered by Mac Flash Entertainment. Again, all powered by local people, which is just really awesome. I do want to make a note that earlier, as I began this session, I missed out on doing our land acknowledgement. I do want to make sure that is articulated again, because even though this event is virtual, we want to respectfully acknowledge that the land on which we gather today is traditional territories of the 3 Fires Confederacy of First Nations, comprised of the Ojibwe, the Ottawa, and the Potawatomi peoples. We are grateful to work, live, and learn in this area. So again, thank you so much for everyone joining. Again, thank you, Jim. It's so good to see you. Long time no see. I'm seeing some of our clients on here. Just so awesome to see so many founders out. Again, there is a full week of activities left. We look forward to seeing you virtually, and we can't wait to have this again next year and hopefully be in person, because we know that energy, that startup energy is something that really, really, I think we're all missing. So Mike, thank you. And to everyone that's watching, thank you for tuning in. We'll see you soon.
Thank you.